Good morning, everyone. Welcome to today's Phillip Securities Research Morning Call. Today, we have a few stock counter updates. For Phillip On The Ground, we have Infotech Systems and Lam Chang Creations. For company update, we have Sembcorp Industries. For technical analysis, we have S&P 500, S-Suite Index, the various stock counters, ETF Monthly, Summary of Trades Initiated. And for macro and sector outlook, we have SG Banking, SG Weekly for week 28, for June's sector and stock performance, and we'll end off with the Phillip Absolute 10 model portfolio update. This is the disclaimer slide. Information presented is solely for educational purposes and not financial advice. Without further ado, I'll hand over the time now to Glenn. Thanks.
Hey, thanks, Ivan. Yeah, so we just start off firstly with the Singapore Banking Monthly. Yeah, so we just titled it as a loan growth at the 3-year high. So I think that's the main highlight of the banks, from the Singapore banks. So we just start off, firstly with the Singapore interest rates. Singapore interest rates fell by 14 basis points month on month to 2.17% in June, and this is the lowest that we have seen the rates at since September 2022. Year-on-year basis, it fell by around 150 basis points, so it's also the most significant year-on-year decline since August 2020. And we do expect that the 3-month SORA will continue to decline as more Fed rate cuts are expected at the later part of the year. For the Hong Kong interest rates, it did plunge again in June. So in May it plunged, and then in June it plunged again. So it fell by 53 basis points month on month. Year-on-year, it fell by 308 basis points to 1.67%, and this is mainly from the confidence in the USD as well as its assets continuing to erode. And we believe that this sharp decline in the HIBOR was due to a surge in the capital inflows. So as more investors returned to the IPO market, they converted large amounts of USD into Hong Kong dollars, and this boosted the supply of Hong Kong dollar into the banking system, which then reduced the need for the banks to offer high deposit rates to attract funds. So as such, that's why we saw this 3-month HIBOR decline so sharply. Now, moving on to the next slide, we'll be looking at the Singapore loans growth. For loans growth, as our title mentioned, it's currently at a 3-year high. So for May, it rose by 5.8% year-on-year, and this is a significant improvement over the previous month's growth of 4.5%, and it's also the highest loans growth we have seen since August of 2022. For year-to-date 25, loans were up around 5.1% year-on-year, so it's still hovering around at this mid-single digit level, and we do expect it to continue for the rest of 2025, where it'll be around this 5% mark, as it's it will recover mainly from the additional rate cuts and the declining interest rates, and more rate cuts expected at the end of the year. However, there could be some pullback, which could be hampered by the trade war, but the banks are still guiding for mid-single digit loans growth in 2025. We will be able to get an update soon from the banks when they release their results. For business loans, it was up by 6.2% in May. The building and construction segment, which is the single largest business segment, rose by 5.5%, and it's also the highest since July of 2022. The manufacturing segment was also quite strong. It was up 13% year-on-year. For consumer loans wise, it's pretty stable. It didn't really move much. It was only up by 5.3% year-on-year. And housing loans, which comprise majority of the consumer lending, was around 4.8%. So consumer loans and housing loans are still quite stable at around this 5% level. Now, moving on to the next slide, we'll be looking at the deposits and CASA balances. So total deposits and balances, this has grown by 6% year-on-year, and more importantly, the current account and savings account, or CASA proportion, it's still quite high at 19.2%. So it's still holding above 19%, although it did dip slightly from 19.3 in the previous month, but it's still holding above 19%. We do expect the CASA ratio will continue to increase as the higher interest fixed deposits mature and funds are shifted back to your current account and savings account. And why is this important for the banks? The main reason is because the CASA represents the lowest cost of funds for the banks. So the higher your proportion of CASA, it means that the cost of funds is lower and the banks are better able to control their net interest margins. And one more reason we are seeing this continued shift is because the banks are continuously lowering their fixed deposit rates. I think everyone has felt it. If you try to get a fixed deposit now with any of the local banks, I think you'll be lucky to get around 2%, right, or even lesser than that. Yeah, so that's the reason why a lot of this is being shifted back into CASA, and the banks are better able to control their net interest margins, although it's in a declining interest rate environment. Now, moving on to the next slide, we'll be looking at the SGX statistics. So for June, the preliminary SDAV rose by 11% year-on-year to 1,226 million, while the DDAV for May rose by 11% as well. So the volumes have continued to rise, but at a slightly slower rate, as the volatility did ease slightly in June. For first half 2025, volume growth was quite healthy. For first half, SDAV was up by 22% year-on-year. And for the VIX, which is a market index that we use to measure the implied volatility of the S&P 500 index, it averaged around 18 in June. So it's somewhat stabilizing from the previous sort of highs that we have seen in May and April. May was 21 and April was 32, and this was mainly due to Trump and his Liberation Day for April. So, but we still believe that this heightened volatility could persist for the remainder of 2025. As long as Trump is still there, and also the ongoing trade war. So this could push up volatility, and it will benefit both the SDAV and DDAV. And overall, with this increased trading volumes and heightened volatility, it will benefit mainly the exchanges. So like SGX will be the main beneficiary of this because they depend heavily on trading volumes. Another benefactor of this would be the banks, because they also have a trading income, but their trading income is of course a much smaller proportion to their total revenue as compared to an exchange. And also, last but not least, of course, a brokerage will also benefit from this. Yeah, so for the top 4 equity index futures turnover, it rose by 9% year-on-year in June to 11 million contracts, mainly due to a recovery in FTSE China A50 futures volumes. Yeah, now moving on to the next slide, we were looking at the Singapore banks' performance, right? So the share price of the performance of the 3 banks did inch up slightly in June, right, with an increase of 0.9%. Nothing much really happened in June. We do still expect a further recovery in the Singapore banks moving to the rest of the year, as stable earnings are anticipated for the next few quarters, as well as the capital return initiatives which have been maintained by all 3 banks. Now, on to my last slide. Yeah, so we do maintain overweight, despite rate cuts expected at the end of 2025. We still do think that the banks can maintain their NIMs, their net interest margins, mainly from the steepening yield curve as well as the higher CASA levels I mentioned earlier. The loans growth is also now expected to slow. I think previously, before Trump announced everything, they were expecting like high single digit with the rate cuts, but now it's moderated down slightly to mid-single digit. But the first order, but then we feel that the first order impact from the tariffs is quite minimal for the Singapore banks. It only makes up around 1 to 3% of total loans, and the trade war also does not directly affect the majority of their customers. I think more importantly, the bank's dividend yields are quite attractive at around 6.6%, and as the capital return initiatives are expected to continue for 2025, and the share buybacks will also improve their ROE and their EPS. So I think there's a question in the chat asking which is the pick for the banks. DBS will be our top pick for the 3 banks. All being said, all equal, because earnings we expect will be quite flat, right, going the rest of the year, as the excess profits will be placed into allowances. DBS is really the only one that is giving a fixed dividend per share of $3.06. As compared to the other 2, is more of a floating and semi-floating. So if you look at OCBC, it's a 50% base dividend payout ratio plus a 10% capital return, and then UOB is 50% base plus a 50 cents per share capital return. So DBS is really the only one that's giving a fixed dividend. So that's something that we would like, even though their dividend payout ratio can go up to 70 or 80%, they are willing to do that. So that's why we like DBS compared to the other 2 banks, all being said. Yeah, so that's all I have for the Singapore Banking Monthly. I'll now hand it over to to Mel for Infotech. Thank you.
Thanks. Next slide, please. Yeah, so Infotech closed the offering on July 2nd and was 14 times oversubscribed. The IPO price was $0.87, but now it's trading at around 0.91. And they do have like a pretty low free floating units. So Cornerstone share was around 63%, and placement share was 30%. So IPO share was around 7%. And Infotech raised 23.4 million to go to and this will to go towards R&D, marketing, and also product expansion. And rough intro for Infotech. The main product line is the cloud-based human resource management system solution. Yeah, so which comprises of 9 modules. Yeah, so it's the graph on the right. Yeah, right top right. So this includes mobile attendance, time attendance, project costing, payroll, leave management, and also like expense claim, etc. And the company targets more towards the SMEs, yeah, since it accounts for around 95% of the total of the 95% of the company in Singapore, and also 70% of the employment of the local workforce. So their HRMS, which accounts for around 79% of the Infotech's total revenue. Yeah, so for this segment, they currently have 950,000 active user and 23,000 organization, which is their existing customers. And majority of the income Infotech has been generating from Singapore, with 50% of the government subsidize of all the costs. Yeah, so which you can claim back within 1 to 2 months. And for a typical case, the total setup cost is around 15,000 per company, including subscription, setup, training, and also data migration. And among the 15,000, you can claim 50%, so it's around like 7.5 thousand. Yeah, the cost is subsidized by Singapore government. Yeah, so we do believe the key growth catalyst will come from Singapore, yeah, moving forward, and other regions such as Malaysia, Hong Kong, and Vietnam, which they currently operating at, they don't provide subsidy. Yeah, so HR system alone is around 9,000, and it doesn't account, so this doesn't include the accounting software. And the unique selling point for Infotech is that they have very low entry fee compared to their competitors. And apart from the 9,000 setup costs, they do charge like $2 per employee, yeah, for the additional employee. And another differentiation is that they have a dedicated support staff, which will respond to all the inquiries within 4 hours. Yeah, so this ensure the pretty high retention rate of 91%. So competitors for Infotech includes BIPO, Just Login, Frontier, and EHR for Singapore region. And for larger regional players, their competitor includes ADP, Workday, and also Veiho. And for financials, FY24 net profit achieved around like 18% jump to 12.3 million. And they do have pretty healthy EBITDA margin of around 38.9%. And for it currently trades at around 19 times PE compared to Salesforce of 24 times and SAP of 32 times, which we believe is relatively low. Infotech doesn't have a fixed dividend policy, but they do plan to distribute at least 50% of the net profit in FY25 and also FY26. Yeah, yeah, that's all for me. I'll hand over to Aikben for another Phillip on the ground. Thank you.
Thanks, Mel. Yep, I'll present on Philip on the ground for Lam Chang Creations. So for Lam Chang Creations, previously they are subsidiary under Lam Chang Holdings. Yeah, so it is their interior design arm. Previously it's called Lam Chang Interior. So now they had a spin-off into a public offering by themselves. Yeah, so for Lam Chang Creations, they do conservation and restoration, urban revitalization, and A&A works. So, for example, as you can see in the top right-hand corner, some of the projects they have undertaken currently, Temasek Shop House, they are doing the restoration and conservation, complete by this year end, and they are also doing the restoration for National Museum, complete by next year end. For this stock counter's IPO timeline itself, 2 days later, the application will open, and 17 July, the application will close, and officially they will list on the SGX Catalyst board on 21st July. So for their shares wise, total there will be 49 million shares. 71% of these shares is new shares, 29% is belongs to vendor shares. As for their valuations wise, they will list on a 16 to 17 times FY24 PE. So that will be about 76 to 82 million market cap. And this will be about 5 to 6 times FY25 forward PE. Yeah, as you can see on the table on the right itself, for the first 6 months of 2025, they have already achieved a higher profit compared to the full year of FY24 itself. And management is confident that if we extrapolate this to second half 2025 performance itself, it will be comparable to the first half. Yeah, so um that's why management is confident that for the forward PE for FY25 itself, it will be just 5 to 6 times. For order book itself for Lam Chang Creations, it is 122 million as of May, and it will last till the end of 2026. As for future potential projects, there will be many old shop houses restorations. For example, the shop houses that you can see in Chinatown, many of them are old and require restorations. And they are also currently building a hotel. And also for the restorations for Singapore's monuments. Currently, there's 75 monuments in Singapore, and less than half of them are being conserved and restored. So there's some room for growth over there. And because government has introduced this SG Heritage Plan 2.0, where they designate specific buildings as monuments that is being preserved for cultural purposes. For example, recently they have designated the Sun Yat-sen Memorial as well as I think the former Istana as a monument to conserve for in Singapore itself. So this shows that there's greater emphasis on cultural preservation in Singapore, and therefore we think that this will drive future projects for Lam Chang Creations. And another driver is also the Singapore Culture Plus, whereby government give all of us $100 to spend in museums as well as all these cultural sites from 2025 to 2028 itself. Yeah, so this further shows there's more emphasis. And because there's also a low turnover for the specialized manpower, whereby like all these restoration works require specialized manpower because they cannot just anyhow replace the parts and destroy the buildings itself. Yeah, so and because Lam Chang management said that there's a low turnover, almost zero. This gives them an edge in the urban revitalization specialist industry, URS, because they are able to keep the specialized manpower. Yeah, so where Lam Chang Creations is being positioned, as you can see in the bottom right-hand corner, they are positioned in the middle of cultural restoration, interior fit out, as well as A&A. So in a typical bid for cultural preservation works itself, management state that there's about only a handful of bidders who can offer all three. And yeah, so what exactly are we talking about? For example, in conservation itself, we are talking about, like, for example, the preservation of the wooden elements, the stabilization of the structures. For interior fit out, we are talking about the flooring itself, the electrical, the pipes. And for A&A itself, we are talking about building extensions, reconfiguration of the space, and so on. Yeah, so Lam Chang Creations presents themselves as a company which can offer all three and gives them an edge compared to the rest. Yeah. So that's all from my end. I'll hand over the time now to Zane. Thanks.
Thanks, Simran. Good morning, everyone. I'll move on to the technicals. Yep. So first slide on the S&P front. Last week, we continue to see a new all-time high closing on Thursday, Friday. The market was closed on Friday. So I think we could still see this bullish momentum continue ahead towards resistance to at around 6,300 to 6,400 currently, as long as the price maintains above the blue line in the chart, which is the 5-day moving average. And current support, it could be at 6,150 to 6,220 for now. Next slide. Next one, we have our ETF money for June. So we titled it Most Asset Classes to Extend Gains in July. Review of the June's performance for the various asset classes. All the ETFs were in the green. Top gainer was ETF tracking oil, which was up 5.8%. In terms of the current trends, S&P 500, Singapore equities and Hang Seng Index are in an uptrend. As for the US Treasury bonds, gold, oil, and Bitcoin, they are in the range consolidation. For our outlook for July, we expect most of these asset classes to extend gains in June into July. So that will be for S&P 500, US Treasury bonds, Singapore equities, as well as Hang Seng Index. As for gold and Bitcoin, we expect some range consolidation, and for oil, we expect the price to pull back from the recent swing high resistance. Next slide. Yep, so I'll be going into more in detail about the different ETFs. So first up, for the S&P 500 ETF VOO, we can see that in June, price broke out above the 545 horizontal resistance level. Then it held a back test in the second half of June and continued on to make new highs thereafter. So very strong momentum. I think we could still see some outside, possibly to test 585. That could be the next resistance level in this month. Next slide. Next one, for the Treasury Bond ETF IEF, generally the range consolidation is still holding between 93.30 to 96.40. So yeah, price rebounding from the range support in June, we could see the price continue to inch up slightly to retest the resistance area around the 96 to 97 area. Yeah, next slide. And for the Gold Mini Shares Trust GLDM, it still kept in the sideways consolidation since April. So the general range is about 63 to about 68 US dollars. Yeah, so we could expect still some consolidation to take place until we see a breakout of either direction. Yeah. Next slide. Next one is the Oil and Gas Exploration Production ETF XOP. So price in June, there was a breakout of this downtrend resistance line and also recovering above the $122 level. So price hit a swing high resistance at about 135. So we expect price to continue to do a bit of a pullback from this swing high resistance this month, possibly to retest the 122 level that could act as a bit of a support in the near term. Next slide. Then for the Bitcoin strategy ETF, BITO, so it looks like it's consolidating in the handle of this bullish cup and handle formation. So we could still see some consolidation ongoing this month but with an upside bias, should we break out of this handle resistance, then it could possibly reach about $22 to $24 next. Yeah. Next slide. Yeah. So for the Singapore equities ETF, ES3, so this one we're still seeing a strong uptrend. So price is still maintaining within the short-term uptrend channel in blue, and also there was a breakout. In June as well. So we could possibly see the Singapore equities ETF trend higher towards maybe about $4.15 to $4.17 as the next level of resistance for this month. Next slide. And last but not least, for the Hang Seng Index ETF. So for this, still moving a bit sideways, but possibly we could see it retest the resistance of swing high resistance previously in March this year at around 93 Hong Kong dollars. Should we continue to hold along this short-term upwards support line? Yeah, so it could possibly retest this resistance, which is close to the rising wedge resistance as well. Next slide. So this one is a chart of the IHS REIT index. So this can be taken as the benchmark for the S-REITs. So in terms of the chart, I think there was a notable kind of price action where there was a price broke above this 1,031 horizontal range consolidation resistance in last Thursday. So it had been the index has been pretty much sideways since November of last year. And I think after this year wise, after the April sell down, Paris managed to recover over to $966 horizontal support, which continue hold as a range support. Afterwards, break off the $998 level with increasing momentum at MACD as well. So I think we could see a breakout of this range consolidation to actually see a rally towards the two resistance levels at 1,100 as well as 1,140. Yeah, so it could be something similar to the price action we saw in August to September last year, where price broke out a range between March to August last year, and then afterwards we saw a rally in September. For the S3 index. Next slide. Now, next one we have a technical buy for the Lion and Phillip S3 ETF CLR at 81.6 cents. Take profit levels 85.3 cents as well as 88.4 cents respectively. Stop loss at 78 cents. Last close was 81 cents on Friday. Also similar the ETFs, the price action is similar to the index. So the price broke out of this 81.4 cents level range consolidation resistance after holding the an upwards support line, which dates back to November 2023 as well. So with that, we could see a rally out of this consolidation towards these two take profit levels. Next slide. Yeah, then this one is just a summary of the technical calls initiated last week. So for Apple, it hit our first take profit level, currently up about 5%. Then for CapitaLand investment, it's up about 2.2%. For WeHer, currently it's flat. For new holdings, it's down 0.8%. Next slide. Yeah, for Yenlot, it also hit our first take profit level, up about 4.8%. For Takrao, it hit our stop loss, so it's down 6.9%. For the trade on Intel, it has not been triggered yet. For Ford Motor, it's currently in progress, up about 4%. Next slide. Yeah. Then for Yangzijiang Financial, it's also in progress, up about 13.2%. For Propnex, currently down 1.7%. Namchong is up 3.3%. Coinbase is currently up about 0.3%. Next slide. Yeah. Then for On Semiconductor is up about 1.1%. For Strategy Incorporated is up 0.4%. And for Oil Tech is currently down 0.8%. And last but not least, for the Lion Phillip S3 ETF is currently down 0.7%. Yep. So this just summarizes all the technical calls initiated last week. So I hand over time to Paul to give an update on Sembcorp. Thanks.
Yeah, thanks, Dean. Just on the update for Sembcorp that we did last Monday, a stable growth ahead. I think we raised our target price and recommendation. Next slide. I think the highlights, nothing exactly meaningful. I think they, in terms of events or news from Sembcorp, they increased their stake by 20% to 50%. Senoko Energy. Technically, I mean, they're buying earnings. The second highlight is that they managed to secure more renewable projects in India, but these are the more complex renewables. Basically, you're providing renewable energy 24 hours. So even at night, you still have to provide the power, even though there's no sunlight or I guess, or maybe less wind, because they'll be using battery technology, and with that they'll get a higher tariffs, or they can charge higher. China's moving towards market-based pricing. Basically, in the past, when you have a wind power in China, they'll give you a fixed rate, but then now it's become more market-related. But it won't impact Sembcorp so much because they've not been bidding for renewables much anymore. Their focus has been mainly in India. Long-term, nothing new. Only long-term contracts will provide the earnings visibility for them. So in terms of outlook, we expect first half earnings to be strong. I think a couple of reasons. Firstly, there's an expansion in their renewable capacity. So when they exited 2024, they increased renewable capacity, which is solar and wind, but mainly wind, I mean, by 24%. So this will contribute to earnings in the first half or the whole of 2025. First half of last year, there's a bit of base effect. There was some plant maintenance costs, if I'm not mistaken, maybe 50 or 60 million. So without that, then of course there'll be one off. The contribution from Senoko Power acquisition, which they acquired 30% in November, and there'll be some land sales in Vietnam. So just a reminder for everyone, Sembcorp, there are three parts of the earnings. There's the renewable business, which is mainly India and China, and there is the usual power business that they have it in Singapore. And the third one is land sales, which is largely in Vietnam. A growth would be a bit more uncertain because we're not sure how much land they can sell in Vietnam, because after 2nd April, I think probably land sales a bit slower because of the uncertainty over tariffs, especially with the news the last half an hour ago. We increased our earnings by 5% mainly because of the acquisition. Our target price raised as we move our valuations closer to the industry. We raised our recommendation. So the demand for power in Singapore will be driven by electric vehicles as more and more get rolled out in Singapore, data centers, and also semiconductor plants. With more stable earnings and operating cash flow, we just think that they'll raise their payout ratio. There was a big jump of 40% in the last year, but we think they can move it to 50 at least, and 50 is not will be manageable. It's not something really high too. But the reciprocal tariffs will have an impact on them, especially on the land sales. Next slide. If you move on to this is just an illustration of the demand. So the black line, sorry if you can't see, but the black line there shows that the power demand in Singapore was at least annual peak demand was about around 2% growth. I think EMA is forecasting it to at least hit 4% per year up to 2030. And the high case is almost 6% per year. So there's a lot of demand coming up. And that's why they're accelerating the number of plants, and that's why the demand is so strong that they need to even import power. Like we mentioned, as far as Australia, which I'm not sure whether it makes sense, but anyway, that's what they plan to import more power. This one on the chart here is just to show the reserve margin. So reserve margin means the amount of excess supply. You can, one way to understand it. So 40% means there's excess excess power over demand by 40%. So if you look at this chart, you will I mean, this is similar to what happened to Hyflux in 2013. I mean, there was just too much power, and that's why they were loss making. But since then, because there hasn't been any new power plants, the demand supply has improved for multiple years. You notice a bit of a bump here, but I think because most of the power plants are very old, the capacity is a bit overstated. Most of it is a reserve. The actual, I think, reserve margin is probably in the mid-teens. But anyway, this is just for ref. This is the available data that we use it. Next slide. Next slide. In terms of our weekly macro, some of the key highlights of macro data that came out last week. Generally, manufacturing is still stable, about 50. And one thing strong has been construction contracts awarded is up 13%. These are record-breaking levels. We show a chart later, but on an annual basis, if you take the last 12 months, construction contracts awarded is up almost 40% year on year. Payments a bit slower, so the actual revenue you get is a bit slower because it takes time to execute. Sometimes there are delays and so on. The property index that was released, the prelim flash number is up about 0.5. Sorry, is the XX here means 3%. So property price only up 3% over the last 12 months. In terms of transactions, the flash was about 4340. So this is about 3% higher year on year. So it's a sharp slowdown from the 70% jump in property transactions. We think during the elections there wasn't any new launch, so that was the factor. And then usual June is a holiday, but that's similar to last year too. There was a surprising number on retail. So retail, there was a big jump in supermarket sales. I'm not sure why. It could be the vouchers that was released, but no, there's been many rounds of vouchers, so I'm not very sure why. But this is quite a big spike. Supermarket sales usually 1 to 2%, but in May it jumped 7%. Some data on the payroll numbers in the US, it was 147,000. So it's actually higher than the 111,000 that was expected unemployment rate. But most of the jobs came from government. The so-called economic sensitive or manufacturing services job was only 15,000. It was the lowest in 18 months. But again, these numbers can be volatile. and subject and need to see the trend. But manufacturing was down for 2 months and so forth. Next slide. Okay, in terms of our tactical views, so our tactical views, I think a lot of it is all property. So the next few slides, bear with it, it's almost like a property presentation. But our tactical views, that as we saw on Friday, they increased the seller stamp duty by 4%. We think it's a marginal impact because sub-sales account for 4 to 5% of all transactions. If you take into account resale and new. If you assume 50% impact, so the impact on transactions could be maybe 2 to 3 percentage points. For new launch, it's very hard to get the exact number how many new launch, but if you take the rolling 4 years, sub-sales is around 13% of new launches. So you can, or maybe one way to understand, maybe 10% of all sales is investor driven. Yeah, and of course, if prices don't rise, it won't sell. But I mean, this is just a rough estimate. And another reason is actually, we'll show you a chart later, but actually is the additional buyer stamp duty that actually impacts transactions. Seller stamp duty, although it's only been tightened twice in the last, 15 years, but usually not much impact, although the sample size is very small here. Yeah. In terms of the risk of more cooling measures, we don't think so. Firstly, the number one is that property price is only up 3%, like we mentioned year on year, and usually the government only or authorities only intervene if it goes up double digit, like 10% and above. Second reason is there's a lot of government land sales, confirmed government land sales coming up. The last 3 years it's been averaging almost 10,000. Compared to pre-pandemic, it's double pre-pandemic. So if you tighten too much, then I'm not sure how they're going to sell all these confirmed land sales, or at least get a good price. And the third reason why we don't think there'll be more cooling measures is also the demand is actually supported. There's like 30% increase in resident population. So there is demand behind all these new homes. It's because the population is climbing back up again. So we're still positive on Propnex and CDL. The foundation of the property market, of course, is the rising HDB prices for upgraders, of course, falling interest rates. And like we mentioned, increased property price. The one thing that we are speculating is that there is also possible loosening of the foreign ABSD. I think, especially for the higher price properties, like those 5 million and above, which are generally outside the range of most Singaporeans. So even if they loosen it from 60 to 40 or even 30, it won't really impact most Singaporeans. So probably we think it's sensible. Probably there is room to relax that. And if you don't, also the inventory in the core central region is going to continue piling up. So all this will especially be positive for CDL, and I think CDL is also undertaking more monetization efforts to close the RNAV gap or the discount to their book. In terms of some of the events, not really much for this week. Of course, the Trump tariff deadline has now been pushed to 1st August. These are some of the events coming up. Next slide. Okay, this is just a chart. The blue line is supermarket sales. We're not sure why, but it just spiked up very sharply in May. Construction sector, you can see here, is very strong. The blue line is construction contracts awarded by the public and private sector. So it used to, if you look at the blue line, the construction contracts awarded maybe 30 billion a year, but now it's up to almost hitting 55 billion. The last 12 months is up 43%. I think that the thing that I think the industry is talking about is that the capacity might be soaked up. A lot of capacity might be all fully taken up. Of course, this will be positive for their margins. But maybe not so good for us, or maybe like more jams or whatever. But anyway, it'll be good for the industry because the margins can improve because capacity is going to tighten very sharply with this type of demand. Next slide. We will move to sub-sales. Sorry, the next few slides will be all property, but just bear with it. Sub-sales is the red line here, percentage of total transactions. There was obviously a jump in sub-sales activity. Sub-sales, for those who do not know, is that you buy the property and then you sell it within 4 years. Basically, you're flipping properties. So the high was about 8%. Of course, pre-TDSR in 2013, this was high, like 10%, but here it's about 8%. But mainly because of the pandemic, a lot of units were delayed, so there was more room and the prices were up, more room for people to flip the properties. But right now it's coming down to the most recent number was about 4%. And if you take as a new launch, this is not an exact science number, but this is the number of sub-sales. That means those who number of units sold within the last 4 years as a percentage of total properties. So it's about maybe 10% or 13%. Yeah. Next slide. Okay, so this is the property price chart. Sorry, it's very noisy chart, but the thing to focus on is the gray bar here. Sorry, apologize again if it's very hard for you to see, but you notice in April 23, where the government authorities raised the ABSD or additional buyer stamp duty, you notice normally before that, the last 12 months is usually a double-digit rise, like 11%. Then they will impose some restriction. Then the prior round was in December 21, where they raised again. Then you notice that prices again 11%. I mean, this is not science. This doesn't mean it will happen all the way, but this is some of the red flags before the authorities will raise price. You look at this chart. Then if you notice the last 2 years, property price is only up 9% or 3% the last 12 months. So we don't think it is sign for the authorities to act because the property price is actually quite stable or gradually rising rather than look very heated. Next slide. So again, just 2 more slides on property or 3 more slides on property. So it's going to be hard to impose cooling measures because if you look at the population, there is underlying demand. The bar here is actually population. So the population is up to 2024 was up 120,000 compared to pre-pandemic 2013, 2014. You're talking about maybe 60,000. In terms of the resident population, you're talking about 30,000. So this is generally in line. There's no number for you to see here, but I mean just for the red line, just for your reference. But of course, population could be also a lot of foreign labor, so it may not be reflective of property demand. So that's why we use residents. The one on the right here is just government land sales. You will notice the last 3 years is hitting almost 10,000, 9,003, 9,008. But the average is 4,006, 2016 to 19. Yeah, actually the line shouldn't be so long, but it just shows that the government is selling a lot more land, almost the double the last pre-pandemic levels. So if they want to sell land, especially with the new master plan, won't be easy if they were to put in cooling measures. I mean, this is just our view. Next slide. Yeah, the other thing is, sorry, this is just a seller stamp duty. So this total transactions, you notice, sorry, a very noisy chart again, but whenever ABSD is introduced, in blue one, that's when the volumes typically drop. SSD is in red, but SSD only tightened. So SSD was introduced in August 2010, but it was very small amount. Then they spiked it up to 16% in January 11. Since then they didn't tweak it. Then March 17 they relaxed a bit. Then of course property market jumped up. But then of course now they impose again. But it doesn't really impact transactions that materially. I mean, of course the sample size is quite small. Next slide. Okay, this is my last one. Yeah, sorry to have so many property sites, but anyway, this is just the upcoming launch. So today there's about 2,600 units to be launched today, and this month. Sorry, and the one to watch for will be in Bow Hill, the Marina View, and Linden Woods. Of course, this is CCR and RCR, but if you want to gauge sentiment, then this will be the 2 launches. There's also this Robinson Opus, which Fraser's Property has invited us to preview. So not for us to buy, but because it's for us to just preview because we can't buy anyway. But it's for us to just have a look and we'll probably give a feedback on how the what comments they have. Yeah, but just that there's a lot of launches coming up, so maybe that's why the authorities are tweaking it. Yeah. Next slide. Yeah, so sorry, so many property slides. This is just the US one, nothing, just to show you the blue line. The blue line is, so actually property market the labor market actually isn't particularly strong in the US if you look at the blue line. So this is the non-government, non-healthcare, non-social, the more economic relevant jobs. So that's actually quite slow. And the one on the right just shows the labor conditions. It is actually worse than pre-pandemic, or weaker. I wouldn't say worse. Thanks. Next slide. Okay, yeah. So as we all know, the news about the tariffs on Vietnam, which will be 20%. Any imports from Vietnam will be charged 20% tariffs. It will go to 40% if there's transmission. Basically, I mean, obviously targeting China. But, so if you look at the chart on the left, you notice that the China's exports to Vietnam and then the amount of goods going to the US, the red line, there's almost a 99% correlation. Yeah, but it just shows that they're likely going to be a heavy reliance on Chinese imports into Vietnam. So there's a high risk of the transshipment, 40% tariffs on anything from Vietnam. But the thing is, we do not know. There's no details. Like what is the value? Maybe is it 10%, 20%, or majority, or what? So there's no details by the US. But it just shows that there is a high risk that tariffs from Vietnam will not be just 20%. It could be higher than 20% because there's a lot of transshipment from China. That means you bring components from China, you manufacture into Vietnam, then I'm not sure how they're going to calculate it also, but then the US will charge 40% on that. So this tariff war is still ongoing. I think Trump just tweeted or on True Social, whatever, the last half an hour that he will impose another 10% on those anti-US countries in the BRICS. So our view is just that this trade war thing is resurrecting again because since he resettled his one big beautiful bill, I guess. Next slide. Okay. Sorry, Ahmad. So just last few slides. Usual, we'll just do a quick review of June performance for the market. So in June, the one that did well has been REITs. So you look at REIT, hospitality, industrial. They are one of the better performance together with property and also electronics. The one on the top 10 gainers, top 10 losers, the REX, all that. This is just including small caps and everything. Top 10 SPDR gainers means basically the STI. So Hong Kong Land was up, Keppel, UOL, down was Wilmar, SIA, Thai Beverage. Just for your reference in June. Next slide. Then the industries that this in US dollar. So REITs did well. REITs was up 5.5. Nasdaq was up 6.6. These were the two performing assets in US dollar. But of course, REITs, I think Singapore dollar probably appreciated like 2 percentage points. Next slide. Then this is by the region. So Singapore small cap also did quite well. It's up about 4.8%. Yeah, I think this is our small cap index. So it's up about 5%. South Korea, Japan. Yeah, this is just for your reference in June. Next slide. Thailand, of course, is the worst. This is our model portfolio. We added DBS and we took out OCBC and UOB, and then we added Sembcorp, like we mentioned earlier, and we added CDL. We took out SETS. So SETS was our bet that the trade war will improve, but it did improve, but the share price is still very weak. So we're just taking out because the price action isn't good. The market seems to continue to worry about the impact on the trade war on them, even though Trump has dialed back some of these tariffs. Next slide. Yeah, sorry, this is the last one. Yeah, we can move to Q&A. Yeah.
Yeah, wait. Excuse me. Yeah, thanks, Paul. Let me just take some of the Q&A first. Let me just see. Yeah, there's one about the fine by MAS on the Chinese. Okay, where did you run to? Okay, yeah. Sorry, fine on. What's the question? Yeah, fine on by MAS on the Chinese laundering saga on UOB. So what's the possible impact, implication, and also whether there's any further downside correction? Yeah, if you look, the fine is 5.6 million, right? You look based on their first quarter, so just 1 quarter of net profit. It's only 0.3%, if I'm not wrong, yeah, 0.3% of their net profit, right? If you look at their I think they made about 1.4 billion, right? So 5.6 million is really just a drop in the pool that they have. And if you look at how it's not like UOB is struggling as well. They're putting a lot of their excess profits. I did mention this earlier. All the banks are into allowances. So if anything, I think they would already have set aside that this 5.6 million, for this fine that they're gonna get by MAS lah. They probably didn't know the amount, but they knew that they were gonna get fined. So it was just about setting it aside. It's not. I don't think it will hurt hurt them financially very much. I think it's more of a reputation, and now on top of that, it's also now they have to tighten their procedures more. It's they cannot take on they cannot grow. I guess the regulations will be tightened around how fast they can grow, how fast they can take on customers, right? So I think that will be the main impact that they will have. They cannot maybe take on as much CASA, from the Chinese, I guess, right? And their AML, CDD has to be a lot stricter. So this will take a lot more time, right? And you also put in a lot more expenses because they will have to buff up their AML, anti-money laundering, and their customer due diligence kind of system. So this all costs, firstly, is time. It costs money also because of the manpower that is needed. And I think they also want to implement it seamlessly into their app and their ecosystem. So that will have some tech costs as well, technology costs as well. So all these costs will dwarf whatever fine that MAS gives them. I think MAS is just giving them the fine. It's more like a warning, just that not to have this happen again. Yeah. So I don't see any material change or impact, in the next quarter or even in the following few quarters for the rest of the year. Yeah, there's one on comparing REITs versus banks. Which to benefit more from the expected rate cut incoming. I'll leave the REITs one to Darren. But for the banks, I think this question is quite easy to answer. I think it will benefit the REITs more. But why wouldn't it benefit the banks more? Is because the only benefit from the banks would be the bump up in loans growth, right? And also them being able to lower their cost of funds. But what we have seen is that the banks are really starting to lower cost of funds, right? If at least most of us here would have one account or some kind of current account with a bank, right? Be it DBS, Multiplier, OCBC, or even the UOB One account. We already see that the rates have all been cut. And on top of that, they are also cutting their fixed deposit rates, right? It has gone down. I think now most of the banks are giving below 2%. From what we were getting about a year and a half ago was like close to 4%. So these are all measures that they're doing to lower their funding costs, to ensure that net interest margins can maintain, right? So they're just taking steps to control net interest margins. That's the only upside I can see from rate cuts for the banks would be that loans growth will start to bump up faster than what it is now, which is mid-single digit, and we could see it faster than that. So that's really the only benefit. I think the benefits for REITs will be a lot more, but I'll let Darren talk about that more. Yeah, let me just look through. I think there's one or two more questions that I saw. Yeah, I think there's one on Tesla. Let me just find it. Yeah, I found it. Okay, so it's asking Elon Musk formed the America Party. Is this detrimental to Tesla stocks as it pits him against Trump? Yes, for sure. Anything Elon Musk does, right? Be it aligning with Trump or now he's going against Trump. Yeah, it will. So Tesla is a very it swings a lot, based on whatever the CEO does, right? So whatever he does will definitely be detrimental to Tesla stock. Firstly also is because he's not what do you call that? He's not I guess fully focusing on Tesla as a company, right? Now he's really going back into politics. So the stock rebounded when he said he was coming out of Doge and he left Doge. And now he's going headfirst into something even, I guess, more drastic than Doge, which is to try to form a third party, right? And then him and Trump are going at it again. So definitely it will be detrimental to the stock. On top of that, right, deliveries and productions, and sales haven't been good. So yeah, so fundamentally they're not doing well, and then politically he's also trying to get into another, I guess, another situation again. Yeah. Okay, I think. Oh yeah, there's one more here. Do you see Singapore banks' earnings to continue growing or some headwinds? Do you expect net interest income to drop with 2 interest rate cuts expected for Q4? Yeah, so earnings will, I think I did say this before, earnings will be flat, right? We believe the earnings will be flat for the rest of the year. Mainly, the main reason is that, no, not they're not making money, but it's that they are putting whatever excess that they have into allowances to, to boost their allowance coverage. And it's really to top up more, right? The banks have all had this huge reserve that they have had hoarded since COVID, right? They put on a lot during COVID, because they said that, it's just to buffer. And they only released, a little bit here and there, throughout after post-COVID, they released for a few quarters, but it's very minimal amount compared to how much they have. DBS is really the only one that says how much they have. I think as of now, they have about 2.5 billion allowance management overlay, right? Or the coverage, excess coverage. So this is quite a huge sum, right? Now they're adding more and more every quarter. The other banks, they don't say how much they have, but my best guess is around 2 billion, and they're just putting on more, right? Every quarter you see that they are actually putting on more provisions than they need to, because they want to add to this management overlay. So earnings will be quite flat, right? For the rest of the year. It's also, I guess, a way for them to control and to let investors know that, okay, this will be what we will be getting, right? And I'm just forewarning you that this is the amount of earnings that we'll be getting for the rest of the year. This is the dividends that we'll be paying out, right? So do you expect net interest income to drop? It will drop. I think it will drop maybe slightly, but they are doing a lot of measures to control their net interest margins, right? They have, like I said earlier, they have lowered fixed deposit costs, lowered their current account costs. They're also, trying to, I think, put a lot more of their assets in their deposits into longer tenure kind of interest earning treasuries, bonds, where they can control their net interest margins better. So I think it will definitely have a slight decline, but it will be quite a controlled decline. Yeah, so that's for those two. There's one more, what's next on the GE saga? It's still, I think the deadline hasn't been disclosed yet, whether or not they have fully bought over GE, right? So we will have to wait and see whether or not they actually accept it. Yeah. So once they accept it, then it will probably be them just trying to reorganize and making sure that everything is synchronized. Yeah. So I believe that there's a high chance it will be delisted, and they will be able to, that main minority shareholder will need to be convinced, basically, that the amount that they offer, the second one, is enough for them. Yeah. So once that is done, then they will be able to fully privatize GE. Yeah. So there's really nothing much now. It's just to wait and see if they accepted it or not. Yeah, they one, I think they own about 2% of GE. Yeah, okay, I think that's all. Let me hand it over to the rest of my colleagues.
Thanks, Glenn. Yeah, I can take on some questions. Yeah. First one is, will we see an appreciation in the share price of UMS integration as it nears the listing in BSKL? And will the thing called valuation gap effect really increase UMS share price after it's listed on the BSKL? Yeah. So I think all in all, my personal take is there may be a slight increase in appreciation of the share price, but I don't think it will be significant. Yeah, because for volume wise, the daily volume for UMS stock in SGX is about 1 million to 2 million. So I think that is quite a decent liquidity. And I think in Singapore itself, quite a lot of analyst houses actually cover UMS integration. So I think there's a lot of information about it online already. And I think valuation wise, compared to its peers, UMS is about in the middle. Because for example, compared to Franken and AEM, UMS is in the middle of those two. Yeah, so it is still sort of average valuations. So there may be some room in terms of appreciation in share price because I think Malaysian tech companies listing in Malaysia tend to have a slightly higher valuation, so there may be a bit of room in appreciation. But yeah, I think as I mentioned, because there's a lot of information out there about the stock itself already, and I think the liquidity is quite decent already, so I don't think it will be that significant. Yeah. I think there's some questions on Lamchang Creations. Yeah. There's two similar questions. The first one is who will be Lamchang Creations competitors? The second one will be sorry, the question skipped. Second one will be what is the competition like for Lamchang Creation and who do you consider as their main competitors? Yeah, so management did mention that their closest competitor is one company called Sunray Engineering. So this company is listed on the Hong Kong Stock Exchange and they have a bigger parent company called Sunray Holdings. Yeah, so for Sunray itself, they are bigger than Lamchang Creations, and they also do contracts that require all three specialties, as I mentioned previously, the conservation, the A&A, and the restorations. Yeah, so um so this is their closest competitor. Another one would be W Ray Holdings. This is a private company. So they also bid together with Lamchang Creations for projects that require all three capabilities. For other kinds of projects that Lamchang Creation may bid for is, for example, like building a boutique hotel and so on, and like building a small building. So those kind will invite more competitors over. So companies like your build, I mean those that specialize in buildings. For example, I think one of them may be Soy Build, or yeah, those other public construction companies that may come in to compete with Lamchang Creations. Yeah, so it really depends on what kind of projects they bid for. But generally, the projects that they specialize in, the conservation, restoration, and A&A works, those are more specialized, and the main competitors that bid with them will be around a handful, about 4 or 5 of them. Yeah. Yeah, hope that answers the two questions. There's also a question. Do you think Lamchang Creations IPO is worth subscribing for to make money? I think it depends on what you're investing for, in my opinion. If you want to invest in Lamchang Creations to get a stake in construction, I don't think it's very worth it because Lamchang Creations is a very small company and is in a very niche area compared to, if you look at the entire construction sector, there's other better companies like building materials, which can cover the entire sector itself, or like much bigger companies that for example with for example like Soy Build with a few hundred millions of market cap, but Lamchang Creations only have about 70 plus million market cap. Yeah, so it depends on your, in my opinion, it depends on what you're investing for. But I think in generally Lamchang Creations is all right in terms of the sector outlook because there's more emphasis on cultural preservation, and I guess is in terms of PE wise, I think they have a good visibility for the next 2 years. So I do think that in terms of valuation they are a bit undervalued. So I think it is worth subscribing. Yeah. Yeah, I think that's all for now. I'll hand over the time now to my other colleagues. Thanks.
Yeah, thanks. Some questions. Yeah. Yeah, I was thinking, what is your outlook for the tax rate in the coming weeks? So update will return drop or grow year on year now that means to service coupon plus for 2%. Yeah, so we don't cover aims, as you know, but for us, we think the dividend will likely increase year on year, mainly because of a better operating performance, first of all, and the fact that you're right that they do have to finance coupon bills for 2%, but remember in March when they took on the new perps, they already paid off some of the higher interest rate debt in their current books while waiting to redeem this perp that is expiring in August. So as a result, they really benefited from some lower interest rates. And as a result, their gearing also fell to 28%. Yeah, so going forward, they will draw down a bit of that paying off this perps that is expiring next month, August, the 5.65. So overall, it's still a positive for them as the previous perp was at 4.7. So they will get some 1% interest savings from that. Yeah, so likely we're expecting rental reversions to still remain quite strong, like probably the high single digits to low double digits. Previously was at 20%. Yeah, so that is yeah, thanks for the questions, Choi. Yeah, Glenn mentioned a bit about the comments on REITs versus banks, which benefit more from rate cut income. Yeah, so for REITs, basically, will benefit a lot from lower interest rates. That's one, and cap rate compression also. As interest rates come down, cap rates will likely compress, and portfolio valuations will likely increase. We've seen that happening for some of the like Stoneweg, the ECB cut rates quite early on, and we saw some cap rate compression and portfolio valuation increases. Expecting more of that to come into play after the June, as in the June valuation is already over, but they'll be announcing it soon. So we're expecting some strong portfolio valuations from there for Stoneweg. So it's similar to other REITs as well, where low interest rates will with the cap rate compression. And also the fact that other yield instruments are becoming less attractive as compared to REITs. As REIT share price still quite lackluster, still quite low, and the yield is still much higher. So the dividend yield spread is still high, above the 10-year average now. So yeah, so definitely REITs will benefit from more cuts income. CICD will be divesting its asset in Frankfurt, the building Galileo, after the latest PI. How will this impact stability updates? Yeah, I'm not sure whether you saw this news, because from what I'm aware, I don't think they'll be divesting. In fact, they just went through an AI, and the major anchor tenant for that is the CD. So yeah, I don't think they'll be divesting the Frankfurt, the Galileo. Yeah, maybe I might miss that news, but I don't think that is the news. Yeah. Yeah, basically how would it impact DPU? Yeah, assuming they don't pay out, and they after the AI, the tenant is still repaying higher rents, and that will definitely improve its DPU payment from higher rental income. When is entity REIT IPO listing? Yeah, the date is set for 14 July. How does it compare to the other DC REITs like KDC? Yeah, so for MPT, I believe the dividend yield is expected to be around 7.5%. So that is more attractive if you compare just a dividend yield compared to KDC. KDC is about 4.55%. Yeah, to compare to digital core, is roughly similar. Yeah, so entity, their assets fall in the US, so that is similar to digital core, where the assets are in the US, and for entity, there's one in Singapore and one in Australia. Yeah, KDC does not have any data centers in the US. Yeah, so that is roughly how it compares to the local data center REITs. why Takrao price drop after Gemlife IPO? Yeah, so I believe there might be some profit taking as Takrao, if you recall, it was at 80 cents at the start of the year, and now it's already almost two times. So there might be some near-term profit taking. But for the longer term, like I mentioned last week during the strategy and stock presentation, the Gemlife IPO valuation of about 200 million Australian dollars is really valued, like just their Takrao stake is really valued more than the whole market cap of Takrao. So even if you slap like a 20% discount to its conglomerate discount, for Takrao is still trading very cheap. So which is why we still have a buy call. Yeah, but I'll think the near term price drop is just a little bit of profit taking. Taking your view on how CapitaLand China Trust participation in Series will benefit unitholders. Yeah, so they'll benefit unitholders in a few ways. So one of it, it'll lower gearing as when they seed the rotting asset into the CapitaLand C-REIT. Basically, the proceeds they use to pay off some of the debt. So that's one. And they also will get some access to the China domestic capital market. So previously, there is no access. And also it's another vehicle for them to divest assets in the future. But there is a 1 year moratorium where they cannot inject new assets. So after that, they can start divesting some of the assets into that C-REIT as well. Yeah, and yeah, definitely it'll lower the gearing as well with the proceeds that plays a part on that. Yeah, and also normally historically for the C-REIT market, we see the REIT listings, the share price performance is quite strong. I think that's mainly because of the fact that the fixed deposit rates is like 1% in China, and the yield for C-REITs is 5%, 4-5%. So it is an attractive play for a lot of for the domestic China market. So usually the share price these C-REITs get bought up, and if there is a similar situation that happens for this C-REIT, then CapitaLand China Trust will benefit from some capital appreciation as well. Yeah. So that's just my 2 cents for that. Oh, okay. Yeah, it's a little. Oh, yeah. Thanks, CJ. Yeah, I think that's all from me. I have to my colleagues. Thanks.
Yeah, thanks, Darren. Yeah, in terms of the UMS dual listing, I'm a bit more skeptical about it because the dual listing in Malaysia, because I think the feedback from Malaysian fund managers is like, why must I help Singapore valuations? Like, why must they help pull up the valuations of UMS in Singapore? Yeah, and benefit Singapore investors. Yeah. So in general, I'm not sure how this, unless it's really cheap. I mean, you're talking about maybe low teens, maybe there's some Malaysian investors would buy, but this is like almost 20 over times. Yeah, the valuation is higher than applied materials. So I'm not sure how this dual listing is going to help them. Maybe the first 1-2 days, maybe. Yeah. Yeah. Okay, let me move on. In terms of the Del Monte Pacific, previously this was bought when it was included in Phillip FSU10 with its US entity filed Chapter 11. Please comment on the SCX list entity going forward in terms of hold or dispose. Yeah, so yeah, we dropped coverage about 2 years ago. What happened, for those who do not know, in 2014, Del Monte Pacific, which used to have mainly in Philippines, they bought Del Monte US for about, I think it's 1.4 billion US, and a lot of it was very expensive debt. So when we covered, the earnings was turning around, and we were hoping they would do a listing, but because that didn't pan out, and then of course interest rates spiked up even more. So a few days ago, what happened was it's a bit complicated, but the US arm basically went into Chapter 11. Based on the recent announcement by Del Monte Pacific, which is the Philippines, they said that there is no liability or contingent liability on their US holdings. I think they were paying interest rate as high as 8%. On their currently the debt as a group is about 1.2 billion. So the Philippine business and Asian business is still profitable. I think they made about 60 million US for the first 9 months, but they still have debt there. My guess is most likely what they're going to do is that they will probably do some rights issue because that's the only way to kind of reduce the debt. So although they're profitable, but they said that their current liabilities is more than their current assets. We tried to reach out to management to get the details, but it's a blackout period. But definitely once their full year results is out, they have a briefing. We'll definitely do a deep dive into this, like what happened and what happened and how the debt went up and everything. But one of the things that was disappointing was the capex for me, because even though the operations was tight, financials was tight, they were still spending a lot on capex. I think almost at one point almost 200 million. So that was the big worry that I had. Of course the debt was there, but I thought they had the operating cash flow and they could actually cut back on capex, but they still insist on spending a lot on capex, despite the tightening liquidity conditions. Yeah, but we will do one deep dive into it, just for everyone. And yeah, the other question is, what is the outlook for Singpost? For me, for Singpost, in the near term, I don't think there's much going on. So for those who may not be following, so Singpost, after selling US, they're going to be, there's a AGM coming, which I'll probably go and try and join into, that they will probably pay a special dividend. But the thing for me is, after the special dividend, there won't be much news flow. The catalyst for the stock will be turn around in postal business, which I mean, we all know not going to happen. So that would and the losses that they are continue to face in Singpost Center, that means all the post offices. So I think the news flow will be if they do a deal with the authorities and either get compensation or maybe close some of the postal office, because that is the part that's still losing money. But I think for that kind of big decision, you probably have to wait, like my own guess, maybe 6 months after all the new ministers are in before they can make such a big decision. Because I'm not sure if they might close postal offices, and that's not a popular thing. Or yeah, I'm speculating here, so I'm not sure. So that would be one news flow. The second news flow would be selling of their freight business. That one might happen anytime soon. So that would be the other catalyst. And the third catalyst would be a selling of Singpost Center. But I think that one there is less urgency to do that. But that might take maybe 2 years' time, because they have to complete the Tampines, because there's still a postal sorting business there, so they might have to complete the Tampines before they decide to sell, because they need to shift everything from Singpost Center. That asset is still 1 billion, so there's still a lot of value in the company, but in terms of the share price catalyst, it will probably take time. I think after paying the dividends, I just don't see much news flow for the share price. Again, this is just my own view. Yeah. What's the outlook for Yang Zhejiang Financial Holdings? I'm not sure, Miao, I think you went for the meetings, right? Yeah, maybe you can answer that. As of the July 9 tariffs deadline, what is the possibility of the market's pullback? I think the risk could be high. I think now his focus is back on tariffs, and he's threatening everyone again. So the new deadline is 1st August. So that is the so I think there's a lot of risk that the market might get affected, because this so-called taco trade has been doing well, but maybe this is the last taco. Means Trump always chicken out, so he may not be chickening out now. So I don't know. So that's why our strategy for the 3rd quarter, for what it's worth, has been the so-called going local. That means we just focus on domestic sectors. So we are still very wary of trade and all that, and all those sectors exposed to that. Yeah, I think of the Takraw one. Yeah, I think Darren answered. Is it still a good time to buy Sembcorp? I think we are still okay with it. I think the first half results will be good. I think that's our own prognosis, And maybe they will announce more increase in the dividends that will make the market like it. Yeah, so that's why we upgraded to a buy. That's our own view. But what's the risk of pharma and semicon tariffs coming soon? Yeah, that could be on the cards. I think maybe that will happen only after 1st August, the new reciprocal tariffs deadline. So everything will take time. I think he's dealing one at a time. So our view is this trade war is not over. So that's why we are a bit still cautious because we do not know how to price it. Yeah, because if we say the trade war is over, then everyone just asks how you know. We basically we do not know. Yeah, because it's up to him. What will happen on 9 July deadline? I think it has been extended, if I'm not mistaken, to 1st August. Yeah. So you're still going to get a lot of bad headlines, but I think the market has so far has so far written off all these bad headlines. And when we get the tech earnings coming up with the weakening of the US dollar, I think the US earnings will be should be very strong, especially the Max 7. Because the US dollar so weak, so their overseas business, I mean the US dollar I think down almost 10%. So a lot of strong earnings should be coming up in the second quarter. Yeah. Especially the tech sector that sell a lot overseas, like Netflix and the whole Max 7 universe. Do you expect more trade deals to come before? Or yeah, definitely. I mean, everybody got no choice. Everybody, I think the whole for ASEAN they got no choice. They just said, ASEAN would just say, oh, there's no tariffs on US imports, but because nobody buy US cars anyway, right? So it doesn't really matter. But I mean, nice for headlines, but no tax on Ford car. I mean, in Malaysia, who's gonna buy a Ford car anyway? Yeah. So you probably get all those news, but the reason why you cannot do it is because this is against WTO. You cannot just give one country zero tariffs and the rest you take. This is not a free trade agreement. So all this just make a whole just going to upset the whole WTO if it's still existing. But that's the issue. But I think probably the playbook or what happened to Vietnam will also hit all the ASEAN countries. Singapore will be the least affected because Singapore, our maximum reciprocal tariffs was 10%. I'm not sure the transshipment because we do actually do transshipment of goods, which is we are a port hub. So I'm not sure what's the definition of the US transshipment. Does it mean manufacturing or we are really a hub, we just take containers and ship them out. So I'm not sure if those will be hit by the 40% tariffs. Which I think Singapore will probably know how to negotiate because there's no manufacturing there. Yeah. But there's a risk too, yeah. But that's for transshipment, not that will impact trade very badly because there's very little visibility. We're not sure what this definition of transshipment actually means. Fundamentally, is Infotech a buy? Yeah, I'll leave it to Miao for that. Yeah. So for me, for Infotech, it's a decent company. Because it's a software company and they only have like 10% market share in Singapore. For selling HR software, and they only charge $2. I mean, so and they're going to get a subsidy from the government. So I'm not sure why the SMEs won't do it. But my only worry is that they don't expect any growth overseas. Yeah, because when you go overseas, there is no subsidy. So what happens is that when you sign on for the HR app, I think it is about 9,000 Sing dollars for installation. So the people will install, incorporate the data, and you can get, I think, maybe 50%, like 4,000 to 5,000 subsidy. And then after that, as an SME, you only pay $2 per employee per month. So I don't think it's that expensive. And the growth will continue, and it's a net cash company. So the growth is decent, but I don't think they can grow overseas. Yeah. Because you want to go, they're trying to go to Malaysia and India. You know how the amount of cost you're going to use, unless you can outsource your sales. Yeah. Between the two IPOs presented, Infotech versus Lam Chang Creation, which is the better bet? The better bet will be clearly Infotech. For Lam Chang Creation, I didn't go for the briefing, but I don't know sure how many Singapore got how many museums to decorate. So yeah. Yeah, and if you want to buy construction, you want to buy Terminal 5, you want to buy the expansion in Terminal 5, the contracts for IR, I don't think this is the company. Yeah. That's my own view. Yeah. Any reason for last week price surge? I really not sure. The only thing we showed you earlier was there's a big jump in supermarket sales. Yeah, in May. I really not sure why. It's already blackout, so the company won't say. But my only guess is because of the vouchers, and we're gonna get another $600 voucher for citizens, so that will probably be causing a spike in the jump in supermarket sales. Yeah, this is my own view. I'm not sure the management, of course, we can't get hold of them because it's blackout. Trump may just do Trump. Yeah, Trump retreat under massive pressure. Yeah, yeah, yeah. I mean, I do agree with you. He might retreat, but again, this is the risk. The risk for the whole market. So it's almost like a binary bet, like a yes or no. So for us, we are just staying away. Our so-called strategy. We just buy the local companies, not exposed to trade, or not directly exposed to trade. Yeah. Okay. I'm not sure if the rest. Remember, if you can do for. Yeah, Paul, what is the definition and layman words meaning Singapore reserves? What time is this metric be released today? Is it free money that the government keeps? So reserves means the international reserves. So most of it is, let's say a foreigner brings money into Singapore, then the money gets into the system. And in general, how the MES mops it up is through government bills. So normally the banks will be the one. So like we mentioned in our strategy, if you look at the MES annual report, there's this thing called Reserve Management Government Securities. That I think it's 260 billion, 280 billion. So that money was actually sent to GIC. So like we highlighted before, at least they dropped 5 billion of that to us, MES. And if you have a conspiracy theory, I think 5 billion is nothing. I think if they can give 260 billion, they can. I'm sure. I'm not sure, but I think there's room. If the initial 5 billion doesn't work, the EQDP to support Singapore market, I think there's room to increase that 5 billion to much more. So in a way, the small caps, if you want to be ultra bullish, there's a bit of a backstop. That means if 5 billion not enough, maybe there could be another 5 billion, since the MES can actually deploy 260 billion to GIC. Again, this is all speculation. Obviously. Yeah, thanks. That's what I mean by Singapore reserves. International reserves. Okay. Is it possible for continuous strong non-farm payrolls, benign inflation throughout the rest of the year? Is there risk of no rate cuts at all? Yes, there's always no risk of no rate cuts, especially inflation if it jumps up. I think payrolls will be stable because most of it is government related, and with the one big beautiful bill, I think the deficit spending will rise again. So I think it's just inflation. But like we mentioned in our strategy again, the new Fed chairman is basically the new Fed chair is basically friendly to Trump. So it becomes political. So even though inflation will be high, our view is that it's a political decision. And when you cut interest rate, it also supports the government's deficit, because the government is paying the US government is paying 1 trillion in deficit, and probably 1.8 trillion by 2034. So by cutting rates, you actually help the government deficit position. So that's why our view is we still think there's going to be a rate cut, because not everybody believes it, but because it become politicized. That's our view. So and our general view is by year end, the REITs could run again. Please don't hold me and say why the REITs don't run, but this is just our view. That because the market might price in rate cuts more aggressively by year end, because they know there will be a Fed chair. Trump will replace Powell, so the market might start to price that, and then again, this is our view. Fundamentally, is Infotech a buy if it goes back to IPO? I think so. Because the public float is not big. Public float is only 2%. So if you buy 87 cents, your cost compared to all the shareholders more or less the same. Of course, there are pre-IPO shareholders, but most of them are moratorium. I think the one thing we didn't show was the shareholding. I'm not sure why, but when you analyze IPOs, you need to look at the shareholding, because you do not want the pre-IPO shareholders to be much cheaper than you. Like I was telling the analysts, you don't want the pre-IPO to go for the buffet before you, right? So everybody go to the buffet at the same time. So when you do IPO investing, most important is to know whose shares can be sold on the first day. So I think for Infotech, the public float is only 2%. The placement is also quite high. I don't have the stats because they didn't show, but I don't think there are many shareholders that are below the 87 cents. So that's the one important metric to look for when you're deciding to invest into IPOs. Which countries could align with BRICS? Yeah, I think after what Trump said, nobody want to be aligned to BRICS. But the countries in BRICS include, of course, India, China, Russia, Brazil. I think Saudi Arabia was also inside it now. Yeah, but I think they will probably scare everybody, and probably BRIC will be quiet for now. Yeah. Yep. Okay. Thanks. Mel, you got anything on Yangtze Financial? Yeah.
Yeah, I'll take the Yangtze Financial. Yeah, so basically they propose to spin off the maritime investment asset into a new entity, and they plan to list it afterwards. Yeah, so we believe this will help to unlock the value, since PB is like for Yangtze Financial, PB is always like below 0.7 times. And that is basically due to the debt investment part in China. But Yangtze has been shifting away from like debt investment. So basically all the loan they can collect, they'll transfer outside of China and inject into the maritime fund. And yeah, NPL has been increasing since the market stimulus didn't really help the NPL ratio, and because of the weak market economy, yeah, non-performing loan has been increasing. Yeah, so we believe like after spin off, this will help to unlock the value from its maritime fund, since it has like pretty good track record, and also like they do have an IRR target of 10%. Yeah, so basically they won't be looking at any deal that is like below 10% IRR. And given the good track record and Yangtze's expertise and network, yeah, we believe the return for its maritime fund will probably has higher return than the debt investment part. And if you remember, like last time when they first spin off shipbuilding, spin off Yangtze Financial from shipbuilding, share price for shipbuilding, like I think it nearly doubled, or it doubled like within 2 years. Yeah, so we do believe this will help to unlock its value for Yangtze Financials. Yeah, hope it answers your question. I'll hand over to Zing probably for technicals. Thank you.
Yeah, let me just do a quick one. Outlook on ST Engineering, is it overvalued or more upside? We still think probably there's a 5-10% upside. Mainly because the share is really like 30 times PE. So I mean, we get a bit more cautious when the valuations are so high. Maybe could be one run after the results, we should be strong because of defense spending. But at 30 times, we are just a bit more hesitant to have a higher target price after that. Yeah, we did raise our target price, I think 3 times. Yeah, we were the highest initially. Then we continued to be the highest, but after now, I think we have been kind of holding it back. Yeah, yeah, because a lot of it is due to re-rating for defense spending, but to a certain level, no, 1/3 of the earnings is still relying on or 2/3 of the business is non-defense. So that's something to be mindful of. Yeah, thanks. Over to you, Zen.
Yeah, thanks, Paul. I'll move on to the TA portion. Yeah, first question is on Keppel. I think last week still continue on the uptrend with a breakout of this it's around 745 level. For now, there possibly could be some resistance at 766. So there could be a bit of sideways, but I think in general uptrend is still very much intact. So near-term support wise would be maybe around 750, this 10 MA level in red over here. I think yeah, as long as this holds, we most likely could still see the uptrend just continues to steadily trend higher. This one is on China Aviation Oil. For China Aviation Oil, I think it hit a horizontal resistance level at around the 92 cents mark. So it's currently it could do some pullback over here. I think that term-wise, it could likely test the 90 cents level, which is this 10 MA level, then maybe some sideways consolidation for the time being. The next question is on Bank of China. So Bank of China, I think it's just trading in a range consolidation. So it's between around 440 to 473. So nothing much for now since middle of May this year. So I think this will just slightly see price being range bound for now. Next one is on CFA REIT ETF. So for the CFA REIT ETF, I think it's trending quite well since the breakout of this 77 cents horizontal level. So previously we were just kept in the range from November last year until now. Then it was a break of this 77 cents. So price, I think, yeah, just holding along the 10 MA for now, the 78 cents level. So I think we might still see it go higher to the next resistance around 80 cents, then followed by around 81.5 cents. Yeah, so I think with the fresh break of this range consolidation, likely we could see some continued upside ahead. Next one for SRT is another REIT ETF, the CSOP IH S-REIT ETF. Yeah, so for this, I think also quite similar with a breakout of this 72 cents level over here, 72 cents resistance level over here. Also tested the 74 cents mark. 74 cents to 75 cents, there might be some resistance. I think afterwards, as long as 72 cents can go as support, then we could see some upside continue on if it does break above 75 cents after that. Yeah, the next reason level above that could be around 77 cents. Okay, next question is on SIA. Yeah, for SIA, I think after a pullback towards around close to 670, just price just rebounded for now. So I think yeah, short-term support-wise could be somewhere around 696, 697 around there. Then resistance will likely be this horizontal level around 715 before price pullback. So for now, most probably I think range will be quite sideways. Yeah, for now between maybe like $7 to about 715. And for first REIT just moving sideways for now. Just moving between 26 cents to 27 cents. Yeah, when you zoom out, the longer term trend is trading within this uptrend channel. Yeah, so we might see a bit of a consolidation for now, but if it does break above 27 cents, then it could test maybe 28.5 cents next as the next resistance level. Okay, then there's a question on Banyan Tree as well as Sing Xiong. And so for Banyan Tree, I think it's very strong. So last week, when you break above this 44 cents level, and then seeing high volume as well. So very strong momentum. I think but now we most likely could still see the bullish momentum continue. Next resistance I guess will be around somewhere like 52 cents to 53 cents area next. So as long as it continue to hold some of the short-term movement, we just like for now, most probably the 5-day MA will be quite important. So that will be around 40, maybe 45.5 for 46 cents level. Long price can continue to hold along that. I think we could see the uptrend continue for now. And then for Sing Xiong, I think last week also was quite strong. Sing Xiong broke out this range consolidation since start of May around the 190 level. So it's currently around $2. So I think it's the new highs as well. So most likely we are likely to see this momentum continue for now. As long as it holds I would think for now maybe 195, 196. As long as this holds as support, we could still see the price trend higher. Okay. And then what's the technical outlook for Yangtze Financial? Yeah, so under that financial, I had a technical buy call last week when it broke above this downwards resistance line. So price was consolidating for a very long time since end of March this year, but there's a breakout recently. As for now, I think after a very strong run, I think 3 to 4 days, most likely we could see some price consolidations start coming. So I think we might see some slight pullback. I think short-term support wise maybe come from this 5 MA level, currently around 83.5 cents or around this gap, which is around 85 cents mark. So that could be, my guess that could be the short-term support for now. Yeah, for some consolidation first. The next one is on ESG, Propnex, and WeHer. For ESG, I think this one could be you could be referring to this one, the low carbon ETF. So for this, not much volume. So I think in terms of EA, can't really give a very accurate answer. But just looking in terms of the trend, I think it has been on uptrend since start of last year, and we have a consolidation range sideways for now. So between like 118 to 122. So I think we might still see some continue sideways, but I think still the uptrend is still intact with the higher lows along the way. And yeah, so for now I think we might see some consolidation, but more towards upside bias as long as 118 doesn't break for now, which is this sideways consolidation range. And for Propnex, I think there's a bit of a dip after this after price initially broke out above this $1.11 level. So I think for now, I think it'll be still okay. For now, it's still above some of the short-term moving averages like 107 over here. And importantly, there's this ascending triangle trend line support over here that is important to hold the price. So 106, 107, I think this will be important support. So as long as this holds, I think the trend is still okay since it's been an uptrend since November last year. And for WeHer, I think price broke out above this 47 cents level last week. So price is just moving a bit sideways for now still. But I think should be still okay because previously price was forming higher lows prior to the breakout and there were multiple retests of the resistance. And then for now it's holding up as long as hold over the short-term moving averages for now. Between 46 cents to about 47 cents for now. I think this will still hold as support. That should be still okay for the price to possibly make higher highs afterwards. The next one is on XOM and SOUN. So SOM is ExxonMobil. Yeah, ExxonMobil, I think generally very range bound. The price is generally making a bit of a lower highs along the way since October last year from this downwards resistance line. Recently wise, it did a back test of this 108 resistance level now holding as support. So we're seeing a bit of a bounce right now. So I think yeah, we could see most likely range bound trading, I guess. For short term support wise, somewhere around like 110 around there. Then resistance wise, I think will be around 113 to 116 in this area. So most likely just sideways consolidation. And then for SOUN is SoundHound AI. For SoundHound AI, and generally it's still range consolidation since February this year. So price is still holding around $9 over here. Then recently looking a bit better with the breakout of this downwards resistance line as well as price breaking about this resistance at $10.30. So for now, this is a resistance at 1160. So I see some sideways consolidation for now. But if 1030 can hold, then I think there could be some more upside ahead. Yeah. Then the next resistance will be around 1270, which is this swing high and also a previous support level. Okay, then there's a question. Hi, is it, I bought Yellow at 57 cents and Promex $1.11. Should I sell the cut loss? Okay, I think for Promex, just now, as long 106, 107, as long the ascending triangle support is still holding, I think that should be still fine. Unless it drops below that, then I think it will hit my cut loss level. I think the trade I initiated last week was 105 should be the cut loss level. Yeah, for yen law, I think should be still okay. Price broke out above this ascending triangle formation, 51.5 cents resistance. So for now, it retested a level over here. Our take profit level 1 around 56 cents. So I think for now, we could see some sideways consolidation with the volume tapering off. 52 cents around here could be the support. Okay, which is the 10 MA as well as the breakout level. Yeah, so probably range consolidation. Then as long as it doesn't break below 50s, this 50s, I think 50 cent level here should be okay. Which this is the ascending triangle support. Okay, I'll move on to the other questions. It's on Citrum. Now, Citrum, I think has been doing nothing much, just range bound since middle of May. So roughly between $2 and $2.12. So I think for now still probably nothing much. Just probably still consolidating sideways. Then below $2 there's another support, maybe at 196 as well. For Capital DC REIT. Capital DC REIT still holding resistance at 233 this swing high. Price moving sideways currently. I think for now there could be some support around this 223, 224 level, which was previously this horizontal resistance, then price broke out above it. Yeah, it also has a upward support line over here as well. So I think most likely it could still continue to move sideways. With this 222, 223 should be a support level for now. Zhejiang Shipbuilding. Yeah, for Zhejiang Shipbuilding, I think price continue to move sideways. This $2 around $2.30 is still quite a strong resistance, and price is just moving sideways between like around 219 to around 229 for now. So I think we could still see some sideways movement for now. Yeah, there's no trend yet. For CNMC Gold Mine, CMC also quite sideways. So it's around this 42 cents to 44.5 cents range for now. So I think we'll still see some sort of range consolidation take place. Yeah, then below 42 cents, next support level around 39.5 cents next. So I think this counter range bound since mid-April this year. Yeah, just been moving sideways. And next question is on LHN. For LHN, I think it's quite a strong uptrend over here. And I think just recently, after this rally, looks like a bit of a sideways consolidation with the volume dropping off. So for now, my take will be that it starts to consolidate slightly with support probably coming from the 10 MA level, maybe somewhere like 67.5 cents. Yeah, then move sideways first. Then if it breaks above 73 cents again, then we could see the rally continue. Yeah. And there's a question on PopMart. Yeah, for PopMart, I think in terms of the strong uptrend for now, is dropped out of it from this uptrend channel over here. So price looks like consolidation for now, just moving sideways. So since it break this uptrend channel over here, price retested the previous resistance at 233, then they a rebound, but a bit of a lower high for now. So I think we could see maybe a descending triangle formation over here, where some resistance for now could be around 265 around there. then support will be around this 233 level. So just it could move sideways for now. This question is for MSTY. This MSTY is MSTI option income strategy ETF. So for this, I think the chart is quite similar to MSTR. So price moving sideways, and good thing is that from this range, the price action doing this range over here, it broke above this $20 level, which price had remained under since middle of May. Then holding as long here can hold as support, I think could be still positive. Then if you can break above this around this 2130 range resistance, then we could possibly see some upside, maybe to try to trend towards a retest of closer to about 2024 over here, this swing high level. And then there's a question on Namchong. And for Namchong, I think last week there was a breakout of this downtrend channel over here. Then price also recovered above this around 48.5 cents, 49 cents horizontal support level breakdown previously. So for now, the bit of a pullback on when price rose, there was an increase in volume that now is pulling back on lower volume. So I think for now, as long as the short-term movement is just along here, like 48 cents still holding, should be still okay. We could see some rebound from over here if it does retest the downtrend channel breakout. Yeah, so for now, I think maybe it could move a bit sideways for now with 52 cents looks like some resistance on this swing high. Then above 52 cents, 54 cents is next level of resistance. The next one is on SIA Engineering. Price is just moving sideways for now, consolidation after the strong rally previously. So I would guess for now, probably just moving sideways with the volume coming off since the highs. Yeah, I think for now the range will be between $3.07 to about $3.28. And it's a question on super micro computer. Yeah, so for SMCI, I think price is moving sideways for consolidating sideways for now. Breakout of this $44 range is still intact, just hanging sideways around 46.60 to about $50.55 at this swing high. So for now, I think we could see some continued consolidation. With the 10 MA could hold as 46.60 over here. Yeah. So as long as it holds the short-term movement, which is this 46.60, as well as remain above 44, I think there could be still possibly, it could still be possible for price to go higher. Then the next resistance could be around $55 next. And next one is on RHB Bank. Okay, for RHB Bank, I think it's looks like a very big range. So since the double top over here at 693 price, which has been exhibiting some weakness with the breakdowns of 667 as well as this 645 level, and currently just moving sideways. I guess for now is moving sideways between 624 to 645. So I think that's it for now. Yeah, then below 624, the next support to take will be around 607. This dip during the April sell off. Yeah. Then yeah, I think that's for it. It should be quite range bound. And there's a question for sets. And for sets, I think price is moving sideways. Yeah. So nothing much is actually going on with the support. There's some support over here at around 303, but I think the stronger one will be probably around 295 this level. Then a bit of a lower highs over here at 309. So some slight weakness, but it's just moving sideways for now. For Hong Kong land, I think also a strong rally. Then starting it's a bit of a, I think taking a bit of a breather right now. So volume is a bit declining. Then some pullback from some resistance close to 645, 646 around there. So I think we could see some pullback for now. Then if it does retest the 10 MA, that could be the short-term support somewhere closer to 596 for now. Then horizontal support level will be somewhere around 585. So I think for now, you might see some pullback consolidation after a strong rally. Next question on UMS and Valuetronics. For UMS, I think it looks like a bit of a consolidation. Some resistance is holding at 137 right now. And yeah, I think support, could be first level of support for now could be this 131, this 10 MA level. Then the second level will be around 126. This gap over here. So I think for now, probably some sideways consolidation, but it's still the uptrend over here is still intact over here. It's formed since April. So it could be some sideways consolidation. Then it does break above 139. Then the next key resistance will be 148 this swing line. For Valuetronics, I think price is doing a bit of a sideways. So I think could be this uptrend channel resistance taking into effect around 75.5 cents. So I think over here, if it does follow the path, we might see some pullback from the uptrend channel resistance area. So for now, I think yeah, volume is coming off as well. So I think for now, most likely some sideways consolidation first. 10 MA over here, 72.5 to 73 cents could provide some support from this swing low as well. Yeah. And then there's a question, they say it's still a good time to go into Sembcorp. For Sembcorp, I think for now, I think it's around this channel, uptrend channel resistance. So I think preferably it'll be better for a bit of pullback if it does happen. So the ideal one will be maybe if it does retest somewhere close to $7.11 to or $7.20 this area. Yeah, then I think that could be a better time to get in. But overall, it's in an uptrend still. Yeah. Then next one is a question on Tiong-Un. Yeah, for Tiong-Un, yeah, recently there's some volume coming in, very sudden surge as well. So I think in terms of resistance, right, I think I look at the historical levels dating back, I think 2014. That's now when I was doing the charts. Some resistance in the data could be at around 71 cents as well as 74 cents. Yeah, there are given the strong surge recently as well, previously was not much volume. So my guess for now will be it could do a bit of a pullback for now towards the 5 MA, then could find some support over there. Maybe 67 to around 68 cents level. Okay, then next one, there's a question on outlook and TA for the 3 local banks. So I think I will do yeah, for first one, DBS. I think DBS, yeah, so price recovered above this $44.45 support breakdown level. So after the retest of this around 43.60 support. Today, I think the key resistance is around $45.43. Today, looks like testing it. So I think there could be a good chance of it trying to break out this resistance because it's tested it multiple times in the past, around 3 times previously. So and price is also forming at a bit of a sort of a higher low consolidation level. at around 43.60. So I think over here there might be some resistance, but I think there could be a good chance of it trying to break through, and next resistance level could be somewhere around 46.50 next. Yeah. And for UOB, I think UOB also looking good with a breakout of this downwards resistance line. There's also price is holding this horizontal resistance as support around 36 level. Today also broke through this tight consolidation process. So I think more good chance for price to trend higher to test this 36.80 level. And the next one will be around 37.30. That will be the current resistance area. And last but not least, for OCBC. Yeah, for OCBC, the chart is quite similar to UOB. Yeah, so price breaking above this 16.30 level. Then today tested this swing high around 16.60. So I think 16.60 to be to 16.90. Yeah, it could test this resistance area for now first, since the breakout of this downwards resistance line, price is trending high. And so I think all three banks are looking quite good for now. And so STI is also at around the record highs levels, holding above 4,000 things. So should be still looking quite. I think I'll stop here for today for the TA. There's still a bit some questions. You can feel free to post in our Poems Tree community group. Then I'll answer over there. Yeah, sorry, it's about 1 o'clock, and we'll try to cut off around here. Yeah, I'll hand my time over to Paul if you have anything to add on. Thanks.
Yeah, okay. Yeah, thanks, Zane. So thanks everyone for your time, especially your questions. I hope you have a good week ahead, and thank you everybody for spending the time with us. Thank you.